down. What about the money? Why does it always come down for money? But it does. And so I'm going to turn it over to Renee, who's the auditor representing the auditing firm for Bristol, to talk about how the finances work.
Randy and Amy are passing out a summary budget that we put together, and while that's going around, I just wanted to kind of let you know how the budget process works for the incorporation, because it's really the same as the budget process for the town's annual budget. We started out with the 2008 actual information and 2009 budget, and did some projections of where 2009 would end up, and then estimated what would happen in 2010 for the town as it currently exists. And so we took all of those expenses and projected 2010 operating costs as well as the revenues. So the budget process really is first to identify all of the expenses on a line item basis, and then to identify revenues other than property taxes, and then finally to estimate what the tax levy is to fund the remaining expenses. And so as a result of that process, the front page of the handout, what you'll see is that the village would levy taxes of $794,000, and the town would levy taxes of $830,000. Amy, do we have one more? And so in total, the taxes levied by the two municipalities would be $1,625,000. And based on the current assessed value, we don't have our new assessed value numbers yet, but based on the most recent assessed value that we had, that would result in tax rates for the village of $2.67 and for the town of $2.66. So you can see they're very similar. And if you look at the history shown on that first page, at those rates in 2010, your taxes would actually be very close, actually a little bit less than they were in 2009 and 2008. You can see those previous 2 years were $2.69 per thousand. And the second page of the handout will give you a summary of all of the budget components for all of the funds of the village and the general fund of the town. Now, many of you who have been at the budget hearings in the past know that the town's financial statements and accounting are quite complex. All government financial statements are complex. The majority of the transactions that you're familiar with are in the general fund, though, and you'll see there the general fund for the village will be a total of about $1,451,000 of expenses funded by a number of revenues that includes property tax of about $480,000 and revenues other than property taxes, which include state aids, that make up the balance of that. The second column is the fire department, and the fire department will continue to operate in the same way that it currently does. Its projected budget is $486,000. And those fire department costs then are allocated between the town and the village. And the allocation is based on the number of fire and rescue calls in the two communities, as well as the square miles of property that the fire department serves. And so the accounting here is a little bit complex, but ultimately what will happen is that the town's share of that fire department will be the amount that's shown on the intergovernmental charge for service line of $252,000. And then the other columns reflect recycling and equipment replacement and the impact fee funds and debt service and the land sale fund that currently exists within the town that will become village funds. Way over on the right-hand side, you'll see the general fund of the town. The remaining town will have a relatively simple financial reporting. It will really only have a general fund and a couple of utility funds. and the utility funds will not raise any taxes. So that general fund that you see there for the town will have total of expenses of $1,340,000, and that'll be funded by property tax of $830,000, and other revenues, which will also include state aids, to give you a balance, to give you revenues of $1,260,000. And the towns will continue to make a contribution to the equipment replacement fund because they will continue to use the equipment through that joint services contract that Mr. White referred to. Well, that's a pretty high-level look at the budget. I'm happy to answer any questions that you have. Yes?
Is there any knowledge of, I know on the front page, the assessed value is kind of stable. Is there any knowledge that once town becomes a village, or does that normally go up with time? I mean, is that something that normally will be raised because we assess value?
It will be raised in the same manner in which it always has, based on increases in property values, or additional development within the town, or the village would increase the assessed value.
Yeah, and I don't think, this is all, non-scientific, but I do a lot of this kind of work, and I'm unaware of any wholesale.
So it's not that villages tend to trend
No.
higher than?
No.
It's kind of whatever the general area is doing, it reflects whether or not you're a village or a town.
Okay, thank you.
I got a question. I kind of understand we've been over it before with you in detail, but for some of us people that aren't really accountants, how does that, let's just use the fire department for an example, how does that split between the town and the village, how does it actually work?
The way it actually works is that all of the cost will be recorded in the village, and the village will then bill some of that cost back to the town. And the methodology that we used to determine the amount that would be billed was to take the total cost and use a factor that includes fire and rescue calls for 50% of the cost, and square miles of property within the two communities for the other 50% of the cost. And so it would be billed from the village to the town, probably on a semi-annual basis, based on the budget, and then trued up to actual cost at the end of the year.
So where does the town get that money to pay that fire department for?
What will happen as a result of the incorporation is a process called division of assets and liabilities. And what happens in that process is that we look at all of the assets that the current town owns, and that includes its cash and investments, its land, buildings, and equipment, any accounts receivable, and that's offset by any amounts that it owes, any long-term debt. And there's a net amount that is then remaining, and that net amount is allocated between the two communities based on assessed value percents. And so what will happen is that the current cash that the town holds will be split between the two communities, and the remaining town will start out with a cash balance.